All right, so this there is a good example of why I have based my volume profile from this structure and why not from the low, which like mark the entire low for this entire range. And that's basically the question that Franz asked me, why not use the volume profile from the low of the range and why use a 5D composite of the value area instead? And the simple answer to that is that you are looking for in the value areas in volume profile, compressed structures which do not have liquid points, which I showed a diagram here as well. So this is your round shaped volume profile, which if I could annotate here. This is what your volume profile overall looks like, which is quite the perfect volume profile, just a bit of an imbalanced part, which I did not exclude because that after we got an impulsive move, we did not really create any sort of low liquid or low volume nodes in our in our value area. And we continue to range afterwards, and is to be included in the range, and our value area is still significantly very compressed. And by the compression, I mean a value area and volume profile structure where your value area is in a rounded shape, where it does not have any sort of inefficiency, which could be more also related. And I can show you what it looks like. So if we draw a volume profile from the lowest low of the range here. Let's start from here. What it does is like it creates that sort of low liquid sessions in low liquid nodes and low volume nodes in your value area. You don't want to see this type of structure in your value area mainly because when you're looking for rotations within value from value area high to value area low, you're mainly looking for compressed structures where you know there's a lot of volume just sitting there and it's going to trap the price within it. So there's like no sort of like low volume. Even this could be considered a low node structure, which if I just like erase or like update. So this is what our value area would look like. So what it does is like it traps price in that sort of structure, obviously with some POC in between. And it's like a clean rotation from that sort of structure from value area high to first POC as your first TP and to the other side of the volume profile, which again, this here just represents a very compressed structure, which just traps the price itself in it, and it's likely that price will rotate to the other side. And if you have like source of low volume nodes or illiquid moves in your value area like this, if I draw a volume profile like this and price entered a volume profile like this, it's likely that it may like bounce from here and it's not going to follow. Obviously, it's going to follow one of the market dynamics of the value area and volume profile, which I could show you here, which simply explain in depth here as well. One of the dynamics, few of the dynamics of the market profile is it could potentially reject from the range POC, but even in that, the preferred structure would be a much rounded profile like this. And even like it could reject, it could come in here, reject from POC, or even not get accepted right away, even if it like comes from the high and maybe just like from prior value comes to that value area, it could potentially just not get accepted into it. But those are different dynamics. The only dynamic that could relate to this profile is the one that is the POC one, where price come into the value area high, come into it and reject or bounce from the POC itself. And that is why these volume profiles are not what is preferred for you to draw and to be trading, because you need compressed price levels where you know that price will be trapped and it's like that will rotate to the other side. So what I was explaining was that if we have low volume nodes in structures like this specific volume profile, it's not what we want to draw. It's likely that you have included some irregular moves or some sort of structures with low efficient moves that have like caused that low liquid moves, and that what that will essentially do is like if price accepts back into a value area high like this, it's likely that it may not get accepted into that low liquid node, or it potentially will react to that high liquid high node, high volume node, because it didn't really react so strong off of that low volume node, and it's likely that it bounced off of that. So that is not the typical, and that is not the prime example of volume profiles that you want to be using, because in volume profiles, market is obviously seeking balance from one place to another, and there's like only two phases of the market. Either it's imbalance or balanced, and when it's in balance, it's likely to rotate from one side to the other side. And that's how you want to be looking at volume profiles themselves. And even you could argue that, okay, we use like daily volume profiles, and in daily volume profiles, sometimes there's like trendy moves as well. There's like rangy moves as well. And you have to like include them both in one profile, because it's like a daily profile. Like it starts the day from here, and the day closes maybe here after chopping as well, and after training as well. But even in those daily profiles, if you have few days open for yourself, let's just say that we have like, yeah, if I could just like draw it here, let's say we have like 5 days, and in those 5 days that we have some days like it's trending, and then there's like some days it's trending as well, chopping as well, and then in some days like it's just chopping, and the other days like chopping as well. So the volume profile that you want to merge, and the volume profile that is useful for you in all those days, is the one that has value area that is much more focused and much more compressed, because that value area is likely to be overlapped with the other day as well, and it's going to create you a composite value area. And it's likely if price comes back into this, it's going to rotate to the other side, and that is going to create another sort of rangy structure for the third day. And now you have like 3-day composite value for yourself, and this is where the market has balanced. And if it escapes this type of balance, it's likely to become imbalanced and seek some previous balance from before. And that is essentially what you want to be looking for in volume profiles, and what is you want to be trading. That was just a good question that Franz asked, and I wanted to clear that up. Okay, bye.